Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be with you on a Monday evening as we talk markets. Obviously, plenty to get through tonight with the shenanigans going on in global markets. Of course, the war in the Middle East, which is no laughing matter. But let's do that after we talk about the disclaimer, which says that the content of this presentation is general nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general advice, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Keep in mind that trading and investing is risky. You're going to lose money at some stage. Ultimately, it's you and not I who's responsible for the stuff you do with your money. Tonight's agenda is to delve into some of those big market moves from the week and hopefully get an idea of where the portfolio management needs to be. Ultimately, that's the point we need to get to. How are we going to allocate risk for reward and for safety as well? So when you, obviously I'll do some work on that, but when it comes to asking your questions, make sure you send me the correct ticker and the market that it's in. For example, BHP on the ASX or MSFT on the NYSE. So I know where it is, the type of setup. Is it a continuation turnaround or aggressive setup? Are we adding risk, maintaining risk, or reducing risk? What are the key levels that you are looking out for? Let us head over to the AMI broker screen where we'll start off with our portfolio management model, looking at the Nasdaq Composite. In tonight's evening update, I said there's a chance, there's still a chance. Don't write it off completely. It may still bounce from the long-term uptrend ribbon. Futures are about 120 points higher earlier this afternoon. I don't know what they are now, but probably not dissimilar. And funny things have happened in a bull market. Putting that chance aside, where does the more often than not lie with the set of technicals we have? Well, falling peaks, falling troughs. So every time we rally up, there seems to be a bit more supply up there waiting to sell into the rally. That's not good, selling into rallies. We want, FOMO into rallies. We want when investors are faced with the proposition of higher prices, they're falling over themselves to get in. Not, oh my gosh, thank goodness, there are high prices. They're falling over themselves to get out. We want to see, when the price does pull back, we want to see strong buy the dip activity. Hey, to be fair, there's a little bit of buy the dip activity, but not enough compared to, say, when we're on the way up. Strong buy the dip activity. We want to see investors holding out for further upside. And here, instead of holding out for further upside, they're selling the rally. So there are all of those, market psychologies are linked, and it's more of the selling into rallies and not buying into dips. Short-term downtrend, long-term trend, I reckon that's a bar, if anything, away from turning amber. And the candles, which were actually, to be fair, largely demand side here, I think now just skewing back towards the supply side with the last couple, and Friday reinforcing Thursday's nervousness. What's holding us up? 21,898. These are just areas, psychological areas for the market. They have no real meaning, and in real life, they're just places where traders are going to transact. I mean, they're looking at that level, and like us, they're saying, well, if it gets below there, it's gone. It's gone ski. There's no reason to own or better sell, or there's no reason to buy. We get limited demand, we get more motivated supply. So that's their relevance, that's their importance. Whilst we're still above those, I guess there's still a chance. Let's see how it goes tonight. Clearly to the upside, there's no hope. How does that sound? There's no hope until we get above at least that high there, which is 22,907. That'll get us above the short-term uptrend ribbon, a couple of big white candles, and you never know your luck. Otherwise, this is the perfect market. This is a picture of indecision. It's a picture still of equilibrium, but slowly changing. Could be rapidly changing soon towards supply-side control, and therefore in terms of our risk. And we've done our analysis. We've accepted the outcome, which is probably now back to more often than not down. There's a good chunk of sideways possibility, and there's an outside chance of heading back up again. But if it did, it wouldn't surprise us. So if that's our set of probabilities we're going to assign, if you've got a different set of probabilities to this, let me know. I'm happy to entertain those thoughts as well. But for me, if those are the probabilities, then we shouldn't be full risk position. I think that's the greatest statement of fact we can all accept. We shouldn't be full risk position. We shouldn't be all invested. And therefore, where should we be? For me, 50-50 is a pretty decent place to be. And at least some, I was going to almost said half there, but that's not unreasonable. Half of the 50% we've invested is probably shorts anyway. So we've got 50% cash, that can't be touched by the market. It can't be destroyed by the market. If the market crashes, that cash is going to grow in purchasing power. If the market goes back up, that is a bit of a problem, as that cash will diminish in purchasing power. But that is the risk we're taking in managing our risk, isn't it? Of the 50% we are invested, I think there's a good portion of longs and shorts within those as well, so we can play the either way nature of what we're seeing on screen. I can do this next one very quickly because I think we're in largely the same position here on the ASX 200. And it's annoying, it's frustrating, you might even go so far as devastating, but not surprising given how little market breadth was associated with that high. There were just so few stocks participating in that rally. If those stocks suddenly turn around, and we've seen resources turn around, then it was going to be hard for the rest of the non-rest of the market to keep us up, and that's exactly what we got. And I think with an indeterminate long-term trend, i.e. amber, short-term downtrend, low peaks now, lower troughs, in fact, and almost a wall of black candles since the all-time high. One couldn't be any more risk-laden than 50-50, but probably not more skewed to the short side. I mean, we don't skew more to the short side necessarily anyway. We've got to reduce our risk even further on the basis that, bear markets, whilst they seem like, just the logic suggests, I should go short, I should go really short. Yeah, you can, but for me, it's still about doing it with a smaller amount of risk because they're so choppy, they're so volatile, and the short covering rallies can be killers. And anybody who's listening tonight who's been shorting for any period of time has seen that already. It's like you think, I'm on top of this trade, and then all of a sudden 3 days back up and you're gonski. And hopefully there's enough of the ones that keep going down to balance that out, but you can understand the volatility there. Whereas if you have trades that are just nicely trending higher, they tend to be less of a headache, Okay, let's do the quick whip around the grounds. Is there anything to push us off this position of being quite risk averse, and let us head to the Dow Jones Industrial Average? And no, there isn't really. And if anything, this was the stalwart, wasn't it? It was the picture of strength. As the growth stocks were getting belted, this was making a new high. Like, what does that tell you? And now even that's coming off, so all the more reason to be cautious. The Russell 2000 is not lost yet. I mean, that's still trying to hold its long-term uptrend movement, but lower peaks, lower troughs, short-term trend is down, all of these same things. No reason to make us want to take more risk, and I don't think any reason necessarily to take less just yet, but not far on this P500. No, we don't have the total. I would look at an equal weight, but I don't think I have it in this list. Heading to, there's our market. So why are we lumped in with the French? Why are we lumped in with the French? All-time high, boom, back beneath the long-term trend ribbon, and the DAX pretty similar, but somehow we look more like the French, a little bit like the Euro stocks, and somewhat like the FTSE as well, and even Spain, the previous strongest market in the world, coming off in the amber ribbon there on the Hang Seng, starting to peel off certainly beneath the short-term trend ribbon there in the Nikkei. That one has completely collapsed, and we're seeing some of the markets that are doing better or worse from a global perception based upon the events in the Middle East. Shanghai is still very, very strong. I think they're still getting their oil. What do you reckon? I don't think they've got any problems with their oil supplies. And then back to us. Quickly looking at some of the sectors, we're seeing no reason, I guess, to have any risk in the discretionary sector at this point in time. Energy looks very strong. Financials is a little bit in the middle, and thankfully is still in the middle, because we look at, say, gold and resources, they are peeling off now. And, I haven't talked a lot about this at Market Index, mainly because I've just been very busy with other stuff. I don't do those Chart Watch Markets editions anymore because I don't have time. But I trust that you guys and girls know how to do the analysis. It was pretty quick, wasn't it? It was fast. I mean, that's obviously not a great candle. Is that enough to pull the trigger on a minus? I don't think so. And neither is that one. Neither is that one. That one's starting to get to the point where I think you can't ignore it anymore. And that one is an absolute yes, because we're beneath the short-term trend ribbon. We've taken out that point of demand, and individual stocks are going to do their own thing, of course. But there was a long distance. There's a long, smooth uptrend here. Low volatility, high volatility on the way down, isn't it? Low volatility up, high volatility down. And then the KISS, isn't it? The KISS of the short-term trend ribbon now acting as dynamic supply. Just amazing stuff. Up, 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 and then down. And X marks the spot, perhaps. Over here, yes, I can't see a reason to have a great deal of risk here anymore. I think that cycle high is in, isn't it? Much like we saw with silver, probably looking more like that with gold, lithium. Anyway, we were looking through the rest of them. We said healthcare is still an absolute train wreck. At least you don't own any of these stocks. Right, could be worse. Information technology, property. That one is rapidly becoming a train wreck. Staples, because of their defensive nature, holding up. Telecommunications neither here nor there, and utilities a little bit more on the defensive side of the ledger. Let's have a look at the base metals, and we'll head over to the line charts here. Aluminium, this is, again, it's winners and losers of what's happening in the Middle East. That one happens to be a winner. There was, I did see some, I shouldn't say obscure country, they'd be offended, but there was a particular country, maybe you saw the article as well, they've got huge holdings of aluminium for whatever reason, that's where it happens to be smelted, and they've restricted exports, I think it was, something like that. So that's why that's happening there. Copper is flattening out, isn't it? That trend is starting to look a little shaky. Iron ore was up a lot, but just pulled back a little bit today. Nickel looks a bit sideways. Lead has broken down. Tin is looking a bit shaky on that short-term trend, as is zinc. So we don't have that simultaneous synchronous positivity there anymore. Lithium carbonate, looking at the candles here, and a decent candle today, actually, surprising candle. I know that the last time we drew both of those in, it ended up moving in the same direction of those dotted arrows, and it hasn't done the last batch of dotted arrows, has it? Where I thought it might just fail to get above the short-term trend and come down and test that point of demand. It's actually held up pretty well for what it's worth, and still not out of the woods. I mean, we've still got two proper major points of supply. It'll be interesting to see how it goes here. And above there, I could warm to it. Beneath there, I still think these are probably dominant enough to see this sort of price action play out at some stage. But call a spade, or a big, not big, a decent white candle, one that surprised me today on lithium carbonate. Some of the other ones over here, if we go zoom, normal, I could actually just skip over here, go have a look at the charts that way. Still strong uptrends, short-term trend still very good, long-term trend still very good. I don't think you'd be de-risking those a great deal. On hydroxide, maybe starting to just get a move a little bit more towards neutral on those last two. And NdPr prices look okay, but yeah, we don't want to see it pop beneath that short-term trend ribbon. That would be a little bit problematic, perhaps. Let's head over to the trading view screen, where we're going to start off with precious metals, and we can see on chart silver. I think this is a bit of one of those probably surprising trades for some, and I don't think for us, where we think, well, there's a war in the Middle East, shouldn't precious metals be going up? Because that's what we were told. We're told they're flight to safety instruments, and it's just, so what? It's just a narrative. And I think, yeah, possibly when there's losses other places in the market, stuff that was up the most tends to get hit to pay for those losses, plus the cycle highs we're in anyway beforehand. Plus, there's a lot of, I think, buy the rumour, sell the fact going on, and sometimes the big money will use these types of narratives or events that fit with a narrative to offload positions otherwise built up at very, very low levels. So they need that liquidity coming in, obviously, to sell. There's nothing in that chart that suggests to me that this still isn't the cycle high, as I've previously called, and gold is still this. I'm still not sure yet if this is a cycle high, as not previously called, but yeah, I mean, in fact, this one is still very strong, isn't it? I mean, it actually is still very strong. So let's pay that the respect it deserves at this stage. Doesn't mean that the local gold sector isn't going to get belted, though, does it? They don't have to move in the same direction as each other. High grade copper looking a bit sideways as we saw in the London Metal Exchange. I'll just go back there, and it's neutral. It is very, very neutral at this point in time. Where wouldn't we want to see it go? I don't know, beneath there. Beneath there, big black candle beneath there. It's going to start to form that as two major points of supply. Beneath there. I mean, there's some obvious levels. We'd love to see it get back above, say, 52.70-ish, and certainly above 54.62. It's on again. And I don't know what set of circumstances around the world would conspire to make that occur. That's the pullback I saw in Asia today in iron ore, but by the close it's actually gone all the way back up. So it was a small black body when I saw it, so that's why I said it pulled back a little bit, but that's net. But in fact there was a big downward push, and most of the local iron ore miners responded to that and didn't respond to the final push. It was probably too late in the day for them. But that only looks like a demand side candle to me, so that still looks pretty strong. Uranium looks neither here nor there, not a train wreck, but also hardly what you'd call inspiring. Most of these we're probably not going to trade anyway, so let's just get to Brent crude, which still looks quite solid up here. Obviously a supply level that will play on the market's mind, but it doesn't seem to be doing it in any sort of ferocious sort of way. It looks like a very orderly advance into that high, and then we'll get a better idea of just how much this has, how much legs it has, I guess. We've talked in the past about a 125 and maybe even up there, what's that, like a 135 as upside potential. Yeah, look, I mean, I'm trying to compare it to the last time. This got off to a bit more of a bang. That was a bit more of a slow sort of build up. I guess this was more sudden, wasn't it? So, yeah, all right. Well, look, I think there are some trades out there that involve being long stocks exposed to this, and there's nothing in that chart that would suggest that I couldn't take on risk in those areas. I think that's the point I can get to. If I was long crude oil futures or CFDs, I wouldn't be completely unhappy with that either at this stage. I think that looks fine. And in fact, the local triple O ETFs have been coming up in my scans. Let us head over to your offline requests. And there are just a few that have come in from the same person. Well, there's the lithium chart again. That's the official one that goes out to my Twitter account. But that's not what we're doing today. We want to do everything else. Mix got SKS calling for minus 1/3. Oh, it's pretty tricky, isn't it? I mean, it's held up really well, as you can see there in the relative strength comparative. Why don't we head over here actually, because we'll get our OTR as well. SKS. See some previous markings. Yeah, where is it? That's probably your minus 1/3 there, I'd say, just because it's confirming this point of supply. That candle in and of itself is a pretty darn big one, but just fell short, I think. What do you think? Just fell short of a compulsory 1/3 on that day. I think on that day, looking for some confirmation one way or the other, with a finger definitely on the trigger. Is that confirmation? It's not far off it, and I think that certainly is. So for me, I think that's the 1/3. First 1/3 Mick, that would have gone very close on that day, only because it ended up being a decent candle. Even if you pulled the trigger on that day, I wouldn't complain, but you ended up with that day. It's all pretty good from here, and then today's the first one that's going back in the wrong direction. For me, yeah, I think even using today's low, what I don't want to see is this sort of thing happening. So I think you would agree, if we had this, then it would be unequivocal. So hence using this area here. So close below, no doubt about it. There's a second, third, and I think I would go flat on that stage, only because we have a little a little medium-term uptrend through here. So it'll flick, 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 flick. All right. which if we're heading down here, not confirmed, but very highly likely, we're going to be MPOS. So by that I mean flick, 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 flick. Oh, tough one here, because that's definitely down. Today you could even go, oh, is that all one move? I think it actually probably is all one move there. So no, I was going to say on first pass that looked like a major point of supply, but below another major point of supply. But yeah, it will be. It's just a little bit of choppy price action, but not undefinable. And I would say beneath that point of demand here, unequivocally, that will get promoted to a major point of supply, and this is probably just a regular one. But we're splitting hairs, aren't we? Because I would put to you that if you were trading here on this day here, this one here, oh, I can't go there, of course, because it doesn't exist yet. That's the one I drew in. If you were here on this day, it would feel like a major point of supply beneath another major point of supply, even if officially by definition it's not quite. It would certainly feel that way. So beneath the short-term trend ribbon, this confirming this, black candles, this for me, yeah, it'd be, we know these add together, so it would be more like minus 2/3, and if we assume that we've already got a third out, that takes us to ZRP is the point I'm trying to make on that one. Bit easier to read. So that's your first one, Mick. Your second one is OMA. Okay, I probably should say, what if it doesn't? Well, if it heads back up, I think it's pretty self-explanatory. We're okay. You can maintain the risk you've got. If it closes above here, would I add to it? I don't think so. I'm too afraid of this thing. But I think that's probably the less likely scenario from here. OMA, which looks amazing. So this is one from memory. I think it went in here. It went in here, went in here, went in there, went in there. I think it was in this morning's report, if I'm not mistaken. Didn't do a whole lot today. So for me, I guess it's just equals R, that last candle. Hopefully we all agree. There's no reason why that last candle would be a minus R at this stage. So I think that one's pretty straightforward. Everything else is looking in the goods. The only criticism I have of this is the number of black candles that it has on screen, which is a lot. Yeah, even when it's going up, there's still somebody sitting on the sell button for some reason. G&P, I would say, unlike the SKS, this is probably still FRP. This is not enough in and of itself to do anything. And then we came back and we did certainly tickled this area, but we closed well above it, back above the short-term trend ribbon. And I think it's actually pretty straightforward here. I think, we're going to use this area as a bit of a point of no return, a close beneath that with an emphatic sell candle would be the death knell for this one. The only question you would have to answer is how much. And I would say, given we can see clearly, and this is not about subjective measures, this is about objective measures. I'm trying to get to that point every time I have a chart on screen. We can say objectively, point of supply, like we did on the last one, point of supply, like we did on the last one, close beneath the short-term trend ribbon. If this candle looks like that, it's a defining strong supply side candle. In addition to this one, I think beneath there, I would struggle to have any risk, but I think as a minimum, minus a third and minus a third order of magnitude on a close below. And you might say, well, it's a bit sideways anyway. I mean, is it looking so good right now to even equals R at this stage? Is it all getting a bit too hard? Okay. But purely based on the last candle we can see, if you're of that volition, then I could see a path to equals R obviously with clear minus R's beneath there. Okay, they're the offline requests. Let's head to your online requests, as Adonis usually has his in first, which is great, and they're US ones, so we'll do those at the end. We've got VEA for Ian, which is that one. And a bit of a turnaround setup. I haven't run it yet from memory. I don't think I have. Let me get rid of all these studies. It sort of feels a bit early in terms of we've just got it back above the long-term trend ribbon. We've seen that it's had dalliances with that long-term trend ribbon previously. Didn't really make a strong showing above it. These lows are all the same. So inside bar, outside bar, inside bar, outside bar. So this is technically all one move. And there's the trough is coming, actually not even here, the trough is here. So if we were to draw these in, so we're looking for high highs, high lows, lower highs, lower lows. These are all high highs. And then I actually think we get a little one in here, don't we? Yep, we've got a little one in there. Well, you could certainly call that as being inside the trend ribbon. And then we come into, oh, yeah, that one. Into there, into there, into there, into there, into there, into there, into there. And the point being, did we have that definitive trough set above the long-term trend ribbon? We actually had one in, so not terrible, but I'm not sure at the time convincing enough. My point is, if I wasn't convinced there, go back, check chart watch. I didn't run it on that day. I don't think I'm going to be much more convinced today. Upper shadow, upper shadow, upper shadow. It just feels like there's a bit of supply in and around here. Probably there. Grab that, click that, put that across. You know, I think that's making a lot of sense. On a day where energy stocks were higher, the whole sector was higher, we're seeing a bit of a rejection of that level today. So that's what we're dealing with. So it's not a no forever. It's just, I think, not enough evidence yet to suggest that this rather pervasive long-term downtrend, not sure why I said short-term trend there, rather pervasive long-term downtrend, which has for the most part respected the long-term trend ribbon, I think is still yet to break free of its vice-like grip. What would help it do that? Something that looked like this, and I don't know, given the history, what are the chances of it happening? Well, I guess it's had one fairly recently. So something like that. I mean, this is a decent candle, that one there, still closed off its lows, off its highs. But yeah, look, something like that would convince me that this is worth a go. And until then, I can certainly see a path to equals R. It deserves at least that, equals R. Minus R's off the table at this point. Where would minus R come back into the configurations? On a close beneath here. So it's just about, for every trade you have, mapping out, literally doing this and mapping out where's your, if your equals R, where's your plus R, where's your minus R. We should always know where our exit points are and our addition points are, and what it would look like. So when we see it, it's far more intuitive. It feels like we know what we're doing already. Let's go to the triple O's have come up, and it's just a matter of finding them because you can't type in OIO and get to where you want to go in AMI Broker for whatever reason. So you've got to try and get close to it. There you go, OP. And it looks a bit like the crude oil chart, funnily enough, the Brent oil chart. And there's no point zooming out. There's no point doing technical analysis on here, is there? It's pointless. So Ian's asked for this one. Ian, there's no point. Don't ask for this. Everybody stop asking for triple O's. There's no technical analysis to be done here. We go back to Brent. Say, hey Carl, can we look at the chart of Brent? There's no point doing TA on here. And we did do the technical analysis here, and I said to you, it looks very strong. Interested to see how it goes here. Doesn't look like there's a great deal of panic in the market at this stage, so that's very positive. Looking at the weekly chart, I'm still not sure where it fits in relation to what happened here, but certainly happy to go with it. And I mentioned this one specifically as appearing in my list fairly recently. We didn't look at coal before. I'm just curious to have a look while we're here. And we have thermal coal still holding towards those highs, and Coca-Cola popping back up with iron ore. So there you go, coal looking pretty solid also. All right, let's head back to, in fact, I didn't go there. That's why some people might have pressed some buttons there on my left-hand side, so apologies for that, but just recapping what I recapped, isn't it? Let's go to Daniel. Daniel's got CNB. I'll make sure I click back to here, which doesn't ring a bell, actually. I know it's Carnaby Resources, but I don't recall it coming up in my charts anytime soon, and that's probably why, because there's absolutely no way it could possibly appear in any of my scans, given that it is short-term downtrend and neutral trend. And for that reason, if we have three options available to us, one being plus R, there's a strong demand side bias. We're seeing fantastic signs of excess demand, short-term uptrend, long-term uptrend, rising peaks, rising troughs, which is FOMO in, buy the dip. Wonderful stuff. Predominance of white candles equals pervasive algorithmic buy orders. Plus R equals R come to mind there, or we've got none of the above and probably some of the opposite. We get to minus R, and I don't need to spend much time on this because I think everybody on Monday knows that those two are off the table on this chart, which leaves us with only one possibility if you're following my trend model, and that is minus R on this one. Let's go to Daniel. I should read the rest of it. Says he's on 2/3 invested, decided to hold for now. Okay, that's your prerogative. It is not consistent with my model. Let's go to RRL, taking some profits. Let's go here, RRL. And yes, I agree. It was very quick. This low volatility uptrend is the killer, isn't it? Oh, look at $10. Well, you would have had to have, by my rule, taken some off the table at $10. That is a do not pass go, do not collect $200, or in fact collect $200. The literal high is $10, ladies and gentlemen. There you go. The all-time high of Regis Resources is $10 and may well be $10. Oh no, what's this? I was thinking that's reconstruction or something going on there. I wouldn't pay any attention to that. I would say that is the all-time high and it may not be there for a very long period of time. So that is a compulsory minus 1/3 without question. What else? So I was going to say, look, there was no way to see it coming, and I reiterate, there was no way to see this coming. That candle there, we know it's a supply side candle, but ho-hum compared to this low volatility, amazing uptrend. I mean, that was a supply side candle, and then it just sort of just gapped up the next day. That's still a good candle. That's still a good candle. I mean, I know we're coming down, I get it, but there's still demand side candles on the day. That's neither here nor there, and that's your first sign. Like, that's the first sign that something's not right. I know these aren't peaks and troughs, but there's a little bit of an intraday sort of dink in there to just give you a feel of the way the market was thinking. Okay, so this is the signal here, minus 1/3 on that day, unequivocal, given the candle. Whether you want to apply the intraday dink or not, that's up to you. It's irrelevant. We've got the candle and we've got the close beneath the short-term trend ribbon. And there's every reason, I think, at that stage to maybe just keep the cheeky component of the trade, you know, or 1/3 if you had to. But if you'd lost confidence in this trade, you know, that's your decision point. Okay, what you decide on that day, I don't know, but unequivocally, hopefully we all agree that's where the final third comes out, and therefore we are ZRP from that point, and quite happily so, given that the next move was to do this and then to do this. Okay, so there was also another point here where if one was applying the system, then one also would have been compelled to follow the system, which requires the reduction of further risk. And even today, with its gap and move, we're almost in the short realm of shorting things now, I guess. So not looking great there. Is there a chance it bounces off the long-term uptrend ribbon? There's a chance anything can happen. Do I want to play that game? Not really. Pass for me. So to answer your question, Daniel, I've taken profit, so that's good. Free carrying position, that doesn't make any sense to me. This idea of it's paid for itself. That's like that money is still money. Do you not want it to grow? Do you not want it to prosper and have more of it, not less of it? No, this idea of free carry is no. We've got capital. We've got risk, I should say. We've got risk and we want to allocate it to the most appropriate place. And that most appropriate place may be on the sidelines in cash. But this idea of free carry is certainly not part of my trading philosophy or trading model. So hopefully I've answered that one. Let's go to EQR. Now this one, amazingly, still looks good. And I fear as much as I'm going to do this, because make no mistake, on a couple of those other charts, I would have done this as well, isn't it? And I would have been wrong. Very, very wrong. But I can't tell the future. Shit happens, unfortunately. It happened. It happened just over 2 weeks ago. It happened, and then it hit the fan, and then it flew everywhere. We all know, right? You can blame me if you like. I can't control the charts. So anyway, much like I would have probably said on some of these other charts 12 trading days ago, plus R equals R. I'm going to say that here because all I can see is a wall of demand, and even as recent as Friday's candle, which is just the most amazing showing of confidence and demand side control, and in today's candle confirming in what was a pretty terrible day today. That is a monster. That is an absolute monster, and it deserves, I think, to continue to have risk on it. Where would that change? I would want to see it close beneath that candle there. It's not an official trough yet because it would require a higher high and a higher low, and I just don't think we had that today. So today's high is 36.5 compared to Friday's high is 36.5, so that's matching. But certainly we do have a little peak to potential trough move, and any higher high tomorrow, and we'll obviously it's formed as a trough. So look, even if it's not, my system is not so rigid that it would ignore that candle as an important point of demand. Okay, that's an important statement that you need to take away today, is that my system is not so rigid that that high being the same as that high would ignore that as an important point of demand. We've got to be practical about these things. So a close beneath here, if there was lots of demand there on Friday, and there was, if we are trading beneath it, I feel we've consumed that demand, and that's concerning for me. So for me, that would constitute a minus R event on a close beneath there. And then we've got other things that might also trigger it. It could be the magnitude of the candle. And certainly if we are closing beneath the short-term trend ribbon, there is more than enough damage done to warrant taking some further risk off the table. So hopefully, there's that word hope. Hopefully this one continues to push in the direction that it's flagging the control of, which is the demand side control. But if it doesn't, we have some options. Could we add risk to this one? Well, yes, I put it on screen, didn't I? I even think today, based upon today's candle, that is on the open tomorrow, assuming it opens roughly where it closed and starts to move in a positive direction, absolutely I could add some risk on this one. Am I worried about this? Not really. It's so damn strong. So that one is, I don't think we're going to see, until we get to US stocks, many charts as strong as that one today. Let's go to the next one on this list here, which is OMA, which we've done, but the only concern there I have is the number of black candles, but still strong. Everything else, Linq Minerals, yes, this one is a definite one. This one is close, I think, to a third in its own right on that candle, but still, I think, in all honesty, we're giving it the benefit of the doubt as we would on that candle. This candle's starting to, I guess, give us some serious concerns because the upward pointing shadow is really confirming what we can see is happening in the system here. Happy with this one, and then I think this is the day. This is the action day. I don't think any of us would allow it to go any further than that day. without taking some risk off the table. And then this is the next one without any pause, with a completely dispassionate nature, saying, yep, third, it's all good here, and probably that candle there. In fact, probably just, I don't think you need to go past that candle, do you? I know we're operating with Harry 2020 hindsight. That candle there, certainly that candle there. I mean, there are ones that are less Harry hindsight and more just obvious. You cannot go past them. And probably the final one, that is the most obvious one, potentially, since the high was made, is the current one. And there can be no confusion that the current candle is also minus a third, and indeed, I think, fitting to put that moniker next to it as well, the old ZRP. All right, thank you for those, Daniel. Certainly very interesting charts. Perry's got some US ones. We'll do those at the end, and a short, and I'm looking forward to seeing that one because I've got very few shorts here, but I do get questions about the next one that David's got, which is about the BBOZ and the B and the Bear and the BBUS and all of those ones. So let's have a look at those, and we'll find that I guess the inverse, obviously, of the ASX 200. The ASX 200 is flirting with its long-term downtrend ribbon. This one's flirting with its long-term uptrend ribbon. Again, there's no point doing technical analysis on this because the technical analysis needs to be done on its source, which is the ASX 200. Okay, so if you believe that the ASX 200 chart warrants the addition of short side risk, then it makes sense that that chart warrants the addition of adding risk, which is still going short, isn't it? And I would say not at this point on that one. It doesn't look good, but it's not as convincing as some of the shorts I'm about to show you. This is still an issue here. This downward pointing shadow, 84.57, 83.83. But it is on the wrong side of the long-term trend ribbon. The long-term trend ribbon now appears, and this is a bit of a smoking gun, to be fair, to be offering or to be acting as a zone of excess supply. That is not good. This almost vertical decline is one of those, it's akin to a species-ending event, isn't it? This was similar, but the one we've had is even faster. So I know you might say, well, Carl, it bounced straight back up after the last one. Sure did, but we didn't really see it. Well, you could argue on that day there that it did, but I think this one's a bit more convincing, isn't it? In terms, I'm looking for the trough into the ribbon and down again. I think this one's a bit more convincing than that one. But yeah, look, my point is, I'm not sure if it's out of the woods. I can, if you made a case for shorting this, I would sit and listen to you. I wouldn't play Tetris on my phone, or I wouldn't do Duolingo. Okay, for example, I'd say, okay, yes, you're making a very good case for it. I'm not completely with you yet. I don't think I'm there yet, but I think you're making a good case. So, David, if you are the one that makes the case to me and I'm sitting there listening to you, then, to answer your question, this starts to come into play, right? And the next one you asked about was the Bear, which is, who's that one? Who's that related to, the Bear? That's also an Australian one, and then we have the US one as well. And that would require maybe the S&P 500, but that's just a guess. I'm just saying that because it looks the opposite of the S&P 500 chart. Okay, so don't do any technical analysis here. It's irrelevant. Yes, you'll be trading these, but do analysis on the main games. Now, how do they compare? Do we short the whole index, or do we look for individual shorts? And my preference is not to short the index. It's very messy. It's very messy because there's you think it's going to be a bad day, and CBA's up 3%, and the index doesn't go anywhere. And these have built into them a time decay component because they're often based upon derivatives like options, and even CFDs have. Well, if they're short usually minimal funding costs, but they can still have funding costs associated with them even for shorts. Futures, there's generally a time decay component. So you could find also that if the market goes nowhere, you're going to lose money on these ETFs. If the market goes up, you're going to lose money on these ETFs because they're short ETFs. And if the market goes down but doesn't go down enough, you could lose money on these ETFs. There's a lot of ways you can lose money on these ETFs, regardless of which way the market goes. However, if you, and this is our job as traders, if you can spread the risk, you were going to apply to that, and even then it's nonsensical to, if you're looking to hedge a portfolio, to just put a plus R on that. You kind of need to make the money you put into that hedging structure commensurate with a portfolio of shorts that you might otherwise operate. Okay, so if you're doing one of those short ETFs as part of a broader short portfolio, I'm confused to why you would do it, because you've got a broader portfolio of shorts. I can't even see it fitting into that. So complementing, no, I can't see how it complements. If you're doing it as an alternative strategy, then just putting a third of risk on BBOZ and maybe some on BBUS and BBUS and BBOOBs or whatever it is, you're probably not going to get enough exposure. You would need to put multiple of R's that you would otherwise be doing this way. But long story short, I think this way is the better way to go, because I think we're going to find better trades. Now, we're trading the charts here. We're not trading the chart of something else and hoping. Now, you're going to do this with whatever it is, the CFD. I don't think you're going to do it with an option. You might have a short selling facility with your broker. Unlikely. I think we just came back to CFDs, didn't we? So assuming this is short sellable with your CFD broker, and they're all different, so I'm not going to say it is or it isn't. Okay, but generally I'm looking at larger stocks that are in the all ordinaries at least, but typically even in higher or in narrower indices. So I'm expecting them, but I don't know, expecting them to be short sellable. I think we're going to find better trades here. We're going to find better setups here, David. Okay, is that a better setup? Is that a better setup for shorting than the ASX 200? With all of the vagaries of the ASX 200. Market is supposed to crash, CBA is up 3%, market doesn't crash. Yet BizAlloy is probably going down, or Dexus is probably going down. So these are the shorts, the short list of shorts I have for you for tomorrow's edition of ChartWatch ASX Scans. And you might say, Carl, that's gone down too much here, but I put it in on this day. So if you would have told me on that day it's gone down too much, well, I don't know, maybe it has, I don't know. But it looks like a picture of supply side control. This one, I want to say, you can go check. I put it in on this day. Go check it. This one is fairly recent. I actually only think I put this in on Friday. AIZ, I think, went in, or it probably went in there. I can't remember, but you know how my system works. This one, I want to say went in on that day, but certainly went on that day. Certainly went in on that day. My point is, I know a lot of these look like they've gone down too much. I know that one went in on that day. IPX, I think that's the first day in. I don't know if I put it in on Friday. I can't recall. Lend-Lease has been in there since that day at least. I don't know if I'd bother on that one, to be honest. MAF went in on this day. And what's the point of me pointing to all these arrows? Pretty sure this went on that day. Pretty sure it went on that day and went on that day. It also went on that day. My point is that just follow the model. That went on that day. It's gone in on this day. That went in on that day. Again today. This one's been in many, many times. Certainly on that day. I think I've got a feeling it went in a bit earlier as well. This one's fairly new. Went in on that day. Zinc, that's the first day it's been in. So my point is I'm showing you a range of different short setups. Some of them have completely capitulated from where they went in the first time. Some of them are partway through that process. Some of them are just starting that process. Which ones are going to be the ones that are down when we talk about this in 3 months or 6 months' time? I wouldn't have a clue. But each and every one of those are they clearer cut showings of supply side control than this one? And that's all you need to answer. It's a very important question that you asked there, David, and hopefully people are happy with that response that I gave, because that's some pretty important stuff we just talked about there. And we know about the short selling tax. If all you like us go off and start exploring shorting for the first time in your trading careers, the market's going to go up 100 points by the end of this. Well, 100 points. It's going to go up 1,000 points by the end of this week. Okay, so maybe you need to take one for the rest of the global team, inevitably. But the next time the market tanks, you will be in at all those crossover points. You'll be in at all of those points there, and this is the point of the short selling tax, ladies and gentlemen. And it might not happen. I know. Carl, I think Carl's being overly dramatic, isn't he? Carl's being overly dramatic, but he's trying to, to be forewarned is to be forearmed. Your short selling tax will involve you shorting, for example, on that chart now, and then seeing the price do this. But my point is that next time you'll be focused on sort of shorting in and around these areas, and then when the market tanks, and the next group, what would you say? The class of 28 or whatever it is, are learning how to short. You guys will be all over it. That's my point. Let's go to Haraju's got FDV. I might be wrong. It might just keep going down. You never know. Frontier Digital Ventures, not terrible. Is it screaming? Is it grabbing me by the shoulders and shaking me and saying, "Hey, Carl, take on some risk here, mate. You know what's hitting the fan, and this has had 8 white candles in a row. Have a crack at it." I'm a pass, Haraju, but I respect that there's some demand coming in. Is it really? If you have to zoom in that far and get a few of these things out of the way. 500,000 is not a lot of shares on a 30-cent stock, let's face it. I'm going to go even further than what I said and say, no, this is still a no for me. I'm not interested in that one. Let's go to MIN, but, hey, no harm in trying, right? No harm in pitching it to me. Mineral Resources, ZRP, yes, please. What about adding risk back? I don't feel that I've put this in any time recently. When I see this and this, it would need to do something freaking amazing to get me back into it before I saw a proper test, like a proper boom, 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 so back in here, and it would have to be a really strong white candle. So look, my point is that, my scans are what I'm thinking, and I stand by them. And you haven't seen Mineral Resources in. Pilbara Minerals got back in. I thought that did enough, but not on this one, because this is hard to come back from. I mean, this really is species ending here. So it would take some proper testing and probing of that supply. And really, all we saw when we neared that supply was evidence of more supply, or reinforcement of that supply, and we're kind of seeing it here. And none of these candles were that inspiring. I mean, this is the only decent candle, really, since those species-ending events. This is actually and we'll talk about this one here. This is actually the only decent candle since those species-ending events. Okay. How about these two? How about these three? Actually, they're pretty good too. They're pretty good too. But they had their own problem. Didn't they? They ran into that and then that. I'm not even sure what the question is here, but somebody did put it, Michael, minus 2/3, possibly ZRP. No, I think it was ZRP ages ago. That's all I'll say about that one. APX, minus 2/3. This is also from Michael. I think this makes more sense. Yeah, absolutely. And again, it's hard to warm back up to these when we are forming major points of supply, and this is an objective measure. It's not a subjective measure. So if you see a major point of supply, how do you know it's a major point of supply? We've got a price action uptrend on this side, and you've got a price action downtrend on this side, so it gets promoted. We have regular points of supply, and they've just got short-term uptrends and short-term downtrends on each side. Okay, but this one gets promoted. This one here is also a point of supply, but we can see on that day, and it's, hey, God, it's so good, isn't it? I mean, I'm so glad we have this model where we look at a candle like that, and we just know, like, we just know what it means. So here's your next one, and if you don't believe that these two candles here, right, are the same as this candle here, in fact, or I was going to say moderately worse, it will certainly have a black body, but perhaps closing a little bit more off its low. No, actually, it doesn't. No, this candle, I know this is not as long as a blended candle. If we blend these two candles together, I'd say we get a candle commensurate with that one. Okay, and what does that tell you about what's happening to the excess supply, right? So we could talk about this as being the first third, first minus a third. I don't think anybody listening today would disagree with that. I think we're all agreeing that that's a compulsory minus a third on that one. I would say that this candle here, because this confirms this, I think this is a minus a third. Hopefully nobody's shouting at their screens going, no way, Carl. No way, that's not a minus a third. You'd definitely hang on that day. And then I think we all agree that even the severity of that puts that, on that day there, puts it as a minus a third. So we'll put it where I can see it. I put that one over here. Yep. So probably ZRP, but here, no doubt about it. There can be not even cheeky risk maintained on that. And you might have said, oh, that was the worst day you could have got out. Or you probably would have got on that day. And I would say, oh, well, so what? This would be another minus third signal. That day in and of itself, that day, knowing what we know, that day arguably could be a minus third. If you didn't do it on that day, this is the day. Like, there's no doubt about it. Good day, little dink here. In fact, another little trough formed there and into this candle, all it is doing is screaming reinforcement, screaming bloody reinforcement of that supply. That's a minus a third. That's a minus a third. That's a minus a third. And I think you're starting to see a little bit of a trend here of minus thirds. And the reason why I'm doing this is, my point is that so many people, what I'm finding in this conversation, and I'm going to find it on Wednesday when I do it with everyone else, is that so many people are asking, look, should I do this? Should I not? No, you should have done it already. What do you need? What more evidence do you need to follow this model? Are you still unsure whether it works or whether it's valid? Like, why have you still got risk when there are 1, 2, 3, 4, 5, 6, 7, 8 minus the thirds on that? 8 times a third is more than a whole. So, yeah, that's okay. If this sounds like a bit of tough love, then that's what it is. Carl, penny for your thoughts on cryptocurrencies. No interest at all. Yeah, I've stopped trading crypto I think it's probably about a year ago now. When did we get above 100,000 for the first time on Bitcoin? And I've been blissfully ignorant ever since. It's been wonderful. I did call a short here, didn't I? You will recall. We'll go here. You will recall that I posted it on Twitter. I think I even wrote it up. A market index. It was on that candle right there, and I said a new bear market has begun for Bitcoin, and that was a pretty neat call. Am I special? Am I clever? No, I just followed my model. That's all. So yes, what would we think about this? And as Bitcoin goes, so do the rest of them in terms of interest. And if Bitcoin is booming, there's interest because it trickles down. It's the trickle down effect into the other crap coins. I know they're called shit coins or whatever they're called. So yes, no interest there, but I can tell you, blissfully ignorant of any of the shenanigans that are going on here. And my God, am I glad I got out of all of that stuff. I didn't get the top. I'm pretty sure I got out. It might have been on this first go. It was somewhere in here, in and around those two candles. I think it was, and then, yep, blissfully ignorant since then. What about Ethereum? Oh, starting to poke its head up, isn't it? What does that mean? Aggressive longs into there, if you could be bothered. Ethereum looks better, but this is a live candle. You've got problems here. You've got problems here. All depends. All depends on your appetite for frustration. I got plenty of frustration over here in Stockland. I've got plenty of things that drive me nuts over here. DTR looks great. Yeah, I only had a list of. Here's the list. So we saw the list of shorts. Here are the list of potential or feature longs. There was maybe I think 3 others that made the general list, but not features. And DTR was certainly on the feature list. It's impeccable for more of a continuation turnaround. And obviously there's a point of supply here that we're starting to interact with, but geez, it didn't look like it was worried about it today. Decent volume push, nice volatility, and then Duratec was the other one. And this one I had to think a little bit about whether I would run it as a feature. And in the end, I looked at the weekly chart and I thought, you know what, in this environment, that deserves to go in. But I think DTR was the better of the two there. We'll have a look at your US ones in a second, Peter. 4DX for -R. Let's check that one out. I know it was traveling well, and sometimes, yeah. I know it was traveling well. I'm happy. Plus R equals R on this day. This day, no, it's not a -R for me. You must say, Cole, obviously that's a -R. It must go down after that candle. I agree with you. It's not a great candle, but I'm a trend follower. I have to give it more than just one rather moderate candle. Let me just get rid of all this stuff. Like one rather moderate candle compared to the ones that, got me to the position of adding risk on this day. I think on this day, I can't remember if I put on that day, maybe not on that day, but certainly on that day. And then it just showed no strength. Like it just completely melted like butter in the last 4 trading sessions. So this is an example of where if I had taken risk on this one, I would be disappointed. I'd be managing my risk on the way out, and all I could say is this is why we're at only half of your capital can be exposed to this inherent volatility where, like DTR looks great, and you're all asking me about, like I've had one person ask me about shorts. Is that right? Yes, I've had one person ask me about shorts. Out of everybody else, in fact, sorry, no, that's not fair. It's 2 because David asked me about the indices, and then Adonis, no, not Adonis, somebody else had one for shorts. A bit Perry did, right? So that's 2 people so far. Now I'm going to look down the list, and good, George has got it, so we're up to 3. George has in fact got another one. Okay, so why are you all still looking to apply risk, everyone? Actually, that's not fair as well. I apologise because a lot of people aren't asking about what to buy. They're asking about how to get out of their positions that they've still got that they know that they shouldn't. And it's that day. It's that day, isn't it? Okay, I better get back to DTR and let's get on with this. I can't believe I've been speaking for an hour. I'm sure you guys have because you're probably falling asleep over there. Yeah, it's tricky, and I apologise. Is that the right thing for me to do, to apologise for bringing this to your attention, to plus R on this day? It hasn't worked out, but that doesn't surprise me one bit given the risk environment that we're in. And if you're going to continue to bang away, if you're going to refuse, you think, oh, I'm a trader, I need to trade, isn't it? And I know that feeling. It's that fear of missing out, that fear of the big trade is going to be there the day that I'm not. That's silly. That's why I have these limits, to force me out of the market. I can continue to bang my head against a brick wall if I want to, but I have to do it on less risk, to the point that I could be as much as only a third that I can play with. That 66% has to be sitting in my bank account, just loving life. And this is fast going. If you could give it another day, I think that's all we're doing. But I think we're getting back to ZRP pretty soon on that one. And I'm going to stand behind that apology, Sudesh. MQG. So George has got some shorts here. MQG now wasn't on my list for feature shorts, but that doesn't mean that it's not one that's shaping up. And look, I think it is, but I would question, George, and I'm glad you asked, because much like we'll talk about, well, what's the problem with this chart to go long for plus R? is, oh, there's lots of black candles and that might just hold me back. Well, here, there's just a few white candles. So there's some pesky demand, some pesky buy the dip, some pesky, oh, this looks cheap. And that pesky buy the dipping is occurring around a pretty solid zone of historical demand as well. Okay, so sort of through there. There's a bit of an impediment to downside volatility is one way you could look at it. And with that impediment, in terms of this thrusting itself up the list of potential shorts, shaking us by the shoulders and saying, hey, this is the one you really need to short, I'm not so sure. But I agree with you that it has the hallmarks of a short, building and possibly just waiting to resume this sort of a signal, okay? Once this buy the dip, once it's been consumed, that cash that is there trying to buy in and think that's cheap, once it's been consumed, and how will we know it's been consumed? We're going to see this, okay? And I'd like to see a solid close near. It doesn't have to get crack this, but it needs to close and close enough to it to tell me that this has been consumed. And then I feel that Macquarie is shaping up for it probably will be a very, very good short. But I think a little early there for me. And Endeavour is, I was going to say it's similar in terms of not ready, but no, I think this one is a long way away from being ready, simply because it is really just churning and rotating. There's white candles and black candles and belief that it's cheap, and then people saying, no, it's not a good place to be. So and not to say that either of those can't plummet the next day. I just don't think there's enough evidence in the price action, in the candles, in the trends to suggest that they are urgent at this stage. But commend you for having a look in that regard. BXB. This one is interesting, and these ones can often be quite, they can have some downside volatility when they crack, they have that last gasp rally and then they get back below again. So yeah, definitely look at this one. I can see me posting this in the downtrends list if I get the candle I want, and you know what that's going to look like. But I think this is much closer to happening. That's not what I wanted to draw. Much closer to happening than the other two at this stage. So this would only take something like this to get it, not just in my watch list, but something like that, and I'd happily feature it for a nice early stage trend reversal. So yes, close on that one. But I'm glad you're thinking about it, and I've given you a substantial list of other possible candidates to short as well. Perry saying my mates at Team Invest are still saying to load up on CSL. Yes, well, it has a high margin of safety, Perry, and a very strong moat is what I would say about that. Yes, CSL. Well, hey, they're going to be right at some stage, aren't they? Whether it's $100 or it could be today, who knows? Yes, God bless the old team investors. From one generation, there's another generation there, isn't there, Perry, of team investors coming to the forefront. If I look, yes, if there's one thing that keeps me going, it's to just outlive a particular individual. They're just out of spite, That's I will not take my last breath until I take it after that person. Let's go to XLF. Says Peter, XLF. What's that one? Oh, maybe that's in the US. Is that in the US? XLF. I don't have it here. So Peter, remember the rules. Tell me what market you're looking at. XLF. No, I'm not finding it there. So we're about to go NYC. Okay, let's head over there right now. Let's finish up today with XLF. Let's head to yours, XLF. Now, I'm guessing that's a financial. Okay, so this is a similar story in terms of whether we go for the ETF or we go for the stocks within there. So the first thing I would say is there's very little point doing technical analysis on this. Okay, what we could do is head over to here and check out our KBX, or probably our KRX, which is the regional banks. And it's interesting that the ETF actually looks worse than the sector at this point in time, but I don't mind either of those concepts. I wonder if they're going to be the worst shorts we're going to find. I can't say that because I don't routinely run scans here. But let us see if we have some that might give us some other options, and then I'll come back and comment on your XLF. Let's go to ExxonMobil, which I know is not for a short. It's obviously for a long. It's one of those energy stocks. In fact, out of all the stocks that people asked to add risk on, I know we've got DTR, so tick on that one. Well done. EQR, well done. Tick on that one. I'm not sure why I didn't see that today, actually. That should have gone in the broader list. I wonder why I didn't see that today. Now I'm concerned that my scan has missed something. So you picked out the two best stocks on the entire, it's like 2,500 stocks or whatever it is, and Monday night picked out, in my opinion, the best two. So congratulations. We've got some shorts, so I think we're punching well above our weight in terms of what other people are doing with their money right now. But we didn't talk about, say, a Santos or Woodside, which are actually coming up in the uptrends. We did talk about triple O's, however. So ExxonMobil just sort of gives you another angle on that. And I don't mind it. Actually, it looks very strong. I think we looked at it last week and we said maybe after these candles, we just need to see it push back into and test and close near that big black candle. And it's, for me, doing most of those things. Maybe one more high close is all I need on this one to solidify it for me, but maybe that's also just splitting hairs a little. I'm happy to go plus R on that one because otherwise everything is very, very strong indeed. And I would like to just have a quick look out here to see if there's nothing there. Okay, so this is a proper breakout here for ExxonMobil, so no complaints on that one. Let's go to APA, which is not one that's ringing a wath. Geez, that looks good. And here we go. So if you've got room for risk, for long side risk, and this is why we turn up on Monday nights, I know you lot are going to find it. That's a ripper. I mean, that's top three charts we've seen today. So we've got EQR, DTR, and this one, and that's a cracker. Is this? It's an energy stock, isn't it? It's an energy utility, Adonis, and I think it was called American Pipeline. Yeah, now it's just called APA. From memory, yes, he's giving me the thumbs up. So that is making more sense as well. So the only thing I'd say here is, look, if you're going to load up on energy, understand that that's a correlated trade as well. This one is not as good as the last two, but it's strong. You can see we've actually had some conversation about this in the past, which was plus A equals R. Look, I'm still equals R. I don't think I'm going to get to plus R on that candle, but next demand side candle, I think you could, because it would hopefully be closing sort of a little bit closer to that high. So look, equals R. Let me see the candle before I go plus R on that one. But we're obviously in the right ballpark there. And CVX, Chevron, which obviously CVX, there we go, is going to look very similar to ExxonMobil. I think it looks better than ExxonMobil. So, and last time we said equals R plus R next demand side candle. Let's just go equals R and plus R to date because we're not waiting for any further demand side candles. I think we've got enough in that one to go. Okay, let's go down the list here, and we've got Perry with E, which is, what is E? Oh yeah, and it's Eni S.p.A. That's not the one. This is the Spanish, if I'm not mistaken, Spanish energy company. Let's go to, that's on BOATS, which is a over-the-counter market, and I guess we're going to find it up the top here, obviously. Oh, far out. Man, there you go. That is now the best chart that we've seen. That's the best chart on the entire market. There's no doubt about it. There we go. What a ripper. So is this as good as going short some of those other stocks? I don't know. I mean, they're similar themes, aren't they? I understand even then that if you're going to be long these and short everything else, it's a highly correlated trade. And again, this is why that if we do get to that moment where we're back to 1/3 risk, this is why it's happening. So there's stuff that it's so counterintuitive even, that 1/3, but you will find, and actually I hope this happens, I hope we end up in a horrific bear market that lasts months and months, because it'll allow me to make some incredible teaching points. And I'm going to sound this out now, and if we come back in 3 months or 6 months, I'll say, remember 3 months ago or 6 months ago when I told you this? Can you see now why we're limited to 1/3? Is you will find that as that bear market is extending, the super group, the untouchable group of longs that you have added risk to, are going up for the same reasons that all the other stuff's going down. And you end up in such a highly correlated trade, and you think, oh, I'm long and I'm short, so I'm cool. I'm not, I've got great hedging. And you're not. You've just got the same trade, just flipped upside down. And that's where that 1/3 max comes in. So when it swings, that's also protecting you as well. So there you go. That is an immaculate chart. Coca-Cola. Actually, this isn't COKE. It's not. Oh, okay. They've renamed it. It was KO before, wasn't it? So, and I think there is still a KO. Oh, no, it's not. It got renamed. Okay, there you go. So it's been a while since all I did was trade US stocks. I had a lot more time on my hands back then. Now, this is amazing as well. Holy moly. Perry's found the 2 best stocks in the universe. Equals R on that one. Coke might be somewhat more diversified, isn't it, than, say, buying an energy company. So that maybe you're getting a bit more there. Let's go to DLB, which is, I'm fascinated to see this one now. So this is Perry Short. I like that because it's got some downside momentum. It's got some volatility. It's got some funk about it. That's a decent candle. What a great touch and hold of the long-term trend ribbon. That looks really neat as well. Yeah, I can't fault that one. Just want to check out the weekly chart and see what's sort of beneath here. And there's actually nothing. So we've taken out this, and you can see why this bounce occurred. This bounce occurred because of that level. And it's shallow, right? It's old. People buying there, there's not that many of them left. And boom, straight back through. Yeah, look, I really like this one as well. So when we're going to go, we're still adding risk to it, certainly if you've got it, but we know what that means, right? I don't need to write short or anything like that on there for you lot. You know exactly what that means. Brilliant, Perry. Brilliant. We're very lucky to have you with us on Monday nights. Let's go to Haraju's got a Coca-Cola. There you go. So Haraju, full credit to him as well for getting Coke. And obviously Adonis has picked some really nice energy stocks for us too. Should not go unnoticed. SU is the other one. This is a TSX, I'm guessing. It might actually also trade it. Look, let's just do this chart. SU. I'm sure it's going to have a. The fact it has a TSX listing that is that consistent, I'm guessing it is primarily a Toronto stock that trades ADRs in the US. But that is another fantastic stock. And I'm guessing one of those solar energy utilities, which is also going to do, it's also going to do well now. Again, probably a correlated trade, but a brilliant looking chart. And we're getting some. We're actually building a pretty damn good portfolio here, I think. Should the prevailing winds continue to blow in the direction they're blowing. Back to Peter's XLF for a short, and that's the weekly chart. And I apologise if I did SU on the weekly chart, but if anything, it looked even better. So just confirming there, and maybe because it was weekly, it didn't remember. Oh, it did. It just reappeared. There we go. And we're going to get to XLF. So this is a nice little segue, I guess. We saw Perry's. What was Perry's one there? A DLB. And comparing to this, look, this actually isn't bad at all. It's actually as good as the other one, but it's just a different type of chart. The other one is a continuation. This is more of a turnaround. So look, yes for me. Yes for me. And again, we've had a sample size of 2, haven't we? But yes. So let's put that on there. When we come back to it and check it next time, plus R or equals R if you are short it. Click save. And I wish we had a few more, but them's the break sometimes. Just scrolling down the list. And we may be at the bottom of the list, and I think we are. Okay. All right, that's it. Let's head back over to the PowerPoint where we will just remind everybody of the disclaimer, which you already know, so I'm not going to spend any longer on it. Then everything we've talked about is general advice. We'll head back here. And thank everybody for turning up tonight. Being a bit of a long session, but I guess lots to talk about. Back Wednesday lunchtime if you care to tune in to that one. Otherwise, all the best until we catch up again. Bye-bye for now.